Imagine a global tech giant, a company whose name is, well, pretty much synonymous with the digital age, starting with just $250.
$250, it's almost hard to believe.
Right. That's the origin story of Infosys borrowed from a founder's spouse. Today, they're a multi-billion-dollar powerhouse.
And what's really fascinating, I think, isn't just that incredible story of growth, but understanding how they're dealing with today's tech shifts. I mean, especially AI, that's the big one.
It really is. That initial spark, fueled by such a tiny sum, has grown into this corporation with a market cap, north of $75 billion now, as of May 2025 anyway.
Yeah, it really speaks volumes about the potential in tech and, the dynamism we've seen emerge from India.
Absolutely. And for those of you tuning in who maybe aren't totally immersed in the tech world day to day, Infosys is an Indian multinational technology corporation.
Right.
Think of them as a major player offering consulting, IT solutions, outsourcing, basically helping businesses worldwide. Their reach is just immense.
Operating across 56 countries, is that right?
Yeah, 56 countries and a workforce over 323,000 people. They serve pretty much every major industry you can think of.
And if you zoom out a bit, their impact goes way beyond just their own numbers. Infosys is like a key indicator, a bellwether maybe, for the whole Indian IT services industry.
That's a great way to put it, an industry that's become this huge force in the global economy.
And you can't forget their role in pioneering the global delivery model. That fundamentally changed how IT services get done everywhere.
Precisely. So our focus today for you is to really conduct a thorough deep dive into Infosys. We're going to trace their history. How did they get this big? Look at their core business model, the key financial trends, where they sit strategically in a very competitive market.
And importantly, what the future might hold. The opportunities, but also the risks.
Exactly. We want to give you a concentrated dose of insight into this IT giant. Pull out the key stuff without drowning you in detail.
So by the end of this, you should have a pretty robust understanding of what makes Infosys tick.
Right. So the big questions are, how does a company go from $250 to global influence? And maybe more critically now, how are they adapting to this AI-driven world?
Those are the key threads we need to unravel.
Okay, let's kick things off with a snapshot of Infosys right now. In fiscal year 25, they brought in around $20 billion in revenue.
$20 billion. That figure alone just underscores the scale, doesn't it? Truly global operations.
And where's that money coming from?
Well, a huge chunk is from what they call next-generation digital services and consulting. Basically, they're partnering with businesses on their digital transformations.
So using tech like cloud, AI, data analytics?
Exactly. Helping clients get more efficient, innovate faster, and like you said, that $75 billion market cap, the 56 countries, over 323,000 employees, it paints a picture of massive scale.
And connecting that back, you mentioned their significance beyond size, being a bellwether for Indian IT.
Right, and that global delivery model pioneer status, that really did reshape things.
It was a total paradigm shift. And a little historical tidbit, they were actually the first Indian company listed on the NASDAQ.
Oh, really? When was that?
Back in 1999. That was a huge moment, signaling, a new era for Indian tech on the world stage.
Which naturally leads us to think about how they got there. That journey from a small consultancy to this global giant, understanding that is key.
Totally agree. So our objective here is to really dissect this complex organization for you, give you a clear picture of their journey, the key milestones, the strategic shifts, alongside, a conceptual look at their finances, their market position, and what's potentially coming down the pike, opportunities and threats.
The goal being to equip you, the listener, to make more informed assessments about this major tech player.
Okay, so let's rewind. Where did it all begin?
It's quite the story. Founded July 2nd, 1981 in Tune, 7 engineers, and that initial capital just $250, borrowed from N.R. Narayana Murthy's wife, Sudha Murthy.
Wow. Started as Infosys Consultants Private Limited, and they had this vision from the start, right?
They did. To be a globally respected corporation that provides best-of-breed business solutions, leveraging technology, delivered by best-in-class people, quite ambitious.
And their first client was actually American, Data Basics Corporation.
That's right. Shows that global ambition was there from day one, really.
So those early years,
Yeah.
What happened next?
Well, a key move was relocating to Bengaluru, now in 1983. Strategic decision, placing them right in the heart of India's emerging tech hub.
Makes sense. And then Boston in 87. First international office.
Yep. cemented that global focus early on. They weren't just thinking domestically.
So what were the really crucial turning points that fueled their growth? These weren't just small steps, were they?
No, definitely not. There were some major milestones that really defined Infosys and frankly impacted the whole Indian IT scene.
Like the IPO in India?
1993.
Exactly. That was huge. It faced some initial challenges, I believe, but ultimately brought in vital capital for expansion.
But wasn't that when they started with the employee stock option plans, the ESOPs? Yes. That was pretty groundbreaking in India back then. Gave employees a real stake, fostered this sense of ownership. You can imagine the impact on motivation.
Definitely. Must have built incredible loyalty and drive.
Absolutely. And then came the GDM, the global delivery model.
The real game changer.
Totally. The idea of distributing work globally, optimizing cost, quality, speed, allowed for 247 work cycles, access to India's skilled talent pool. It just transformed IT services.
And it wasn't just Infosys using it, right? It became the blueprint.
Oh, completely. It set the standard. Then, 1999, that NASDAQ listing we mentioned.
Monumental. First Indian company, boosted visibility, credibility.
Access to capital, share price soared. It really put Indian IT on the global map in a big way.
And they navigated the Y2K boom, too.
They did. That was another key moment. Everyone needed system upgrades, and Infosys stepped up as a major partner, really solidified their reputation for reliability under pressure.
Right, turning a potential crisis into a showcase of their capabilities.
Precisely, building trust with huge organizations.
And the growth since then, hitting those big revenue numbers.
Yeah, $100 million in 99, then $1 billion in 2004, which really showed the power of the GDM, and $10 billion in 2017. Each milestone marked significant expansion, adapting to the market.
And acquisitions played a part, too. Maybe not the main driver, but still important.
Right. Not as central as organic growth, but strategic ones. Like Lodestone in 2012 for SAP Consulting. That was about $350 million.
And Scava and Panaya in 2015. More digital focus.
Exactly. Bolstering digital and application delivery. And more recently, the missing link in 2025, jumping into cybersecurity, shows a clear focus shift towards digital and specialized areas.
Which brings us to leadership. It hasn't always been the founders, has it?
No, several key CEOs shaped different eras. You had the founders like Murthy setting up the GDM, then periods of scaling under others.
Then Dr. Vishal Sikka, first non-founder CEO. Big focus on AI, automation. Some controversy, too.
Right. And now Salil Parekh, driving stable growth, really pushing digital and AI. Plus, Nandan Nilekani returned as chairman, providing that continuity. Each leader brought a different emphasis, reflecting the times.
And corporate governance.
Yeah.
That seems to have been a focus for them.
Generally, yes. Especially early on, that commitment to transparency was crucial for the NASDAQ listing. Built a lot of trust.
Though maybe some bumps during leadership changes.
There were some challenges reported, yes. But overall, a strong historical focus.
And that leads us to the most recent shift, the really concerted pivot to digital and AI.
Absolutely critical. Over the last decade, especially under Parekh, it's been all about next-gen digital, their cloud platform Cobalt, and the big AI push with Topaz, essential for staying relevant today.
So how does this all translate into their actual business model now? How are they making money in this rapidly changing landscape?
Good question. At its heart, it's still about providing tech and consulting solutions, helping clients transform digitally, become more efficient. Revenue is mostly service fees, with some from software licenses and platforms.
And the split. Is it still mostly services?
Overwhelmingly. FY24 figures show about 94.5% from software services. That covers a huge range.
Like what specifically?
Everything from the bread and butter application development and maintenance, or ADM, right through to high-level consulting services on digital transformation, cloud strategy, AI implementation, cybersecurity, even sustainability now.
Okay. Plus infrastructure management, business process management, BPM, engineering services for specific industries like manufacturing.
And crucially, digital services. That's where you see the strategy, UX design, mobile web development, cloud migration using Cobalt, AML implementation with Topaz, IoT, data analytics. It's a broad church.
And the other 5.5% or so, products and platforms.
Right. Smaller slice, but strategically vital. Think Finacle, their core banking platform. That's a flagship product.
Huge in the banking world.
Definitely. Then EdgeVerve Systems holds Finacle and other enterprise software. Panaya helps manage Oracle applications. And they have others like Equinox for commerce, Topaz for AI.
So how do they charge for all this? Must be varied.
Very varied. You've got the classic time and material model. Fixed price for well-defined projects, unit of work or transaction-based pricing.
And increasingly outcome-based models,
Yeah.
where they get paid based on results.
Exactly. Or gain share models. That's becoming more popular, aligns incentives. Plus, of course, IP royalty and SaaS models for their software. They're even using AI now to help with dynamic pricing strategies.
Interesting. That outcome-based approach really fosters partnership, doesn't it?
It does. Their overall value proposition ties into that. Amplify human potential and create the next opportunity, aiming to lead in next-gen digital and consulting.
So for the client, it means help with digital transformation, efficiency, innovation, cost-cutting, getting a competitive edge.
Precisely. And while the GDM's pure cost advantage might be less unique now, it still offers massive benefits: talent access, quality, speed, especially combined with their new tech expertise.
Who are they selling this to mainly, and where?
Target audience is large global corporations, but also newer tech companies across loads of industries. Financial services is the biggest chunk, nearly 30% of FY24 revenue.
Followed by retail, communications, energy, manufacturing. It's really diverse.
Very. Geographically, North America is dominant, around 61% of revenue. Europe is next at about 25%. India itself is smaller, around 3%. Then rest of world is 11%.
And their footprint reflects that offices and development centers all over those 56 countries.
Right, and they are consciously rebalancing that onshore-offshore mix. More onshore presence now, about 24% in Q4 FY24, for pricing agility and local client needs.
Plus those innovation hubs and digital studios you mentioned for co-creation.
Exactly, places like Indianapolis, Hartford, and while their direct R&D spend as a percentage of revenue isn't huge.
Like 0.70, 0.8%.
Yeah, something like that. But they have these big initiatives. Infosys Topaz for AI, Cobalt for cloud, the Knowledge Institute for Thought Leadership, the $500 million Innovation Fund, the Innovation Network for Startup Partnerships.
All focused on key areas like AI, cloud, data, IoT, cyber, and specific industry needs.
And underpinning all this is talent. Over 323,000 Infoshians, as they call them. Huge emphasis on training, reskilling via platforms like Wingspan, especially in digital skills. They even have elite power programmers for product development.
Managing that scale,
Yeah.
the complexity must be immense. How do they ensure quality and execution across the globe?
Well, the GDM is the foundation, obviously, but they've invested heavily in standardized project management, collaboration tools, communication infrastructure. Consistent training is key, too. And those innovation hubs help spread knowledge internally and with clients.
It's quite an orchestration. Decades of refining that global collaboration model.
It really is.
Yeah.
Okay, so broadening out now, let's look at the industry landscape. Where does Infosys fit in the bigger picture?
Right. It's a massive market, isn't it? Global IT services. Trillions of dollars.
Huge. Gartner estimated it around $1.42 trillion in 2023, forecasting growth. IDC sees maybe slower growth in broader services due to macro issues, but tech and automation are still seen as vital for cost savings.
And the main engine driving growth seems to be digital transformation.
Absolutely. That market segment alone is projected at over $1 trillion in 2024, with forecasts suggesting really strong growth, like over 28% CAGR in the coming years, driven by cloud, AI, big data, IoT.
So what are the absolute key trends shaping this industry right now, the things Infosys has to nail?
Well, AI, especially generative AI, is top of the list, no question. Cloud computing continues its relentless march. Data analytics and big data remain fundamental.
Cybersecurity is non-negotiable now.
Paramount. Plus, a huge focus on customer experience through digital means, and automation RPA and the like for efficiency gains.
And how does the regulatory stuff impact them? Things like data laws, visa rules.
Significantly, data localization laws, like India's DPDPA, affect where data can be stored, impacting costs and strategies. U.S. H-1B visa changes influenced hiring more local hires needed, which affects the cost base, too.
Okay, so competition. It's fierce, right?
Yeah.
Who are the main players they're up against?
Oh, it's intense. You've got the global giants like Accenture's strong brand, big on Gen AI and cloud, often premium pricing. IBM with its tech portfolio, consulting arm, focusing on hybrid cloud and AI.
And their Indian peers. TCS, Wipro.
Right. TCS is their closest rival in scale, also investing heavily in AI. Wipro's restructuring. HCL Tech has shown strong brand growth. Cognizant is aiming for top-tier growth, targeting large deals in AI.
Plus smaller niche firms, tech product companies they partner and compete with, even in-house IT departments.
It's a crowded field.
So where does Infosys actually rank in all this? How do they stack up?
They're consistently seen as a top 3 global IT brand. Impressively, they've had the highest brand value growth rate among the leaders over the last 5 years or so. Market share is significant, though precise global figures are tricky. But remember that geographic split, 60% North America, 25% Europe, gives you a sense of their core markets.
And how do they try to stand out? What's their differentiation strategy?
Key pillars are that AI-first strategy with Topaz, their cloud platform, Cobalt, big investments in talent and innovation, those deep client relationships and industry expertise they've built up. Also, trying to balance using partner tech with developing their own unique solutions and IP. And while the pure cost advantage of the GDM isn't what it was, the scale itself is still an advantage. Plus, that strong brand and financial stability.
It sounds like that Red Queen race analogy really applies here. You have to innovate constantly just to stay in the same place.
Absolutely. Their big bets right now are clearly AI and cloud. Sustained investment is non-negotiable.
So, quick comparison. Accenture known for brand and high-end consulting. TCS for massive scale and execution. Where does Infosys fit?
Infosys really stands out for that rapid brand value growth, the very deliberate AI push with Topaz, and their focus on talent development.
Okay, let's talk about their competitive advantage, their moat. How strong and sustainable is it?
That's the million-dollar question, isn't it? They definitely have sources of a moat. Brand reputation is huge decades of trust built up, high switching costs for clients deeply embedded with their services.
Economies of scale from the GDM, talent management, infrastructure.
Right. Intangible assets, too, their methodologies, knowledge-based platforms like Finacle and Topaz, maybe some emerging network effects on certain platforms.
But how durable is that moat? The GDM cost advantage has eroded, you said.
Exactly. Its durability really depends on successfully transitioning to those higher-value digital, cloud, and AI services. Can they keep differentiating through unique platform solutions? Can they sustain innovation and reskilling? Maintaining the brand and client trust is vital.
And navigating the regulatory maze is becoming a competitive factor itself.
Absolutely. Plus, managing that complex frenemy ecosystem, they compete and partner with tech giants like Microsoft, Google, AWS. Differentiation comes from how they leverage those partnerships and add unique value industry expertise integration skills to avoid just being a middleman.
Right, a delicate balance. Okay, let's shift gears and look at their financial performance, focusing on the trends.
Good idea. And just a reminder for everyone listening, this is conceptual, based on public info up to FY25. Always check their official reports for precise data.
Fair enough. So, historically, revenue growth has been pretty strong, often double digits.
Typically, yes. Recently driven by digital transformation, cloud, AI, FY25 saw about 4.2% growth in constant currency. But
the guidance for FY26 is more cautious, 0.3% constant currency.
Right, reflects the macroeconomic uncertainty, clients being a bit more careful with spending, maybe some specific sector challenges.
On the plus side, though, they had a massive year for large deals, $11.6 billion in TCV.
Very strong TCV, yes. And a good chunk, 56%, was net new business, which is positive for the pipeline.
What about profitability? Historically strong margins.
Generally strong, yeah. Consistent focus on operating margins. FY25 actually saw a slight uptick to 21.1%, helped by efficiency drives like Project Maximus.
But there's always pressure, right? Talent costs, reskilling investments, competition.
Yeah. Constant pressure. The shift to digital and platforms aims to boost margins long term, but that needs upfront investment. Net margins are generally healthy, though.
And debt. They're known for being conservative.
Very, often called debt-free. Strong balance sheet. Billions in cash and investments. Record free cash flow in FY25 over $4 billion. That gives them huge flexibility for investments or shareholder returns.
Which brings up that constant tightrope walk.
Yeah.
Balancing growth and profitability.
Exactly. Push too hard on growth or pricing, margins can suffer. Focus only on margins, you might lose market share. Project Maximus is their response to try and optimize that.
So what are the key financial metrics you'd tell listeners to keep an eye on?
Definitely revenue growth, especially in constant currency. Digital revenue growth and its share of the total mix shows strategic progress. Operating margin and net profit margin, obviously. Large deal TCV and the net new percentage. Employee attrition rate recently around 13.7%. Utilization rate excluding trainees recently about 86%. Earnings per share, EPS. Free cash flow, FCF and FCF conversion rate. And return on equity, ROE, which was over 32% in FY24.
And strategically, they're trying to move away from just adding headcount to grow revenue.
Right. Using platforms, IP, AI automation, outcome-based models to get nonlinear scalability. Higher revenue per employee, that's the long-term transformation goal.
Makes sense. And capital allocation. How do they decide where the money goes?
They have a clear policy. Return about 85% of cumulative free cash flow over 5 years via dividends and buybacks. They aim for progressive annual dividend increases.
Consistent dividends, occasional share buyback.
Exactly.
Yeah.
But they also invest significantly in growth organically through R&D, talent development, building digital capabilities like AI and cloud, and inorganically through M&A.
But their M&A approach is more targeted. Responsible M&A, they call it.
Precisely. Not about buying massive revenue chunks. It's about acquiring specific capabilities, accelerating market entry, enhancing offerings. Think Lodestone for SAP or the missing link for cyber, strategic fill-ins.
So balancing shareholder returns with investing for the future, a mature approach.
It suggests that, yes, okay, let's pull back and use the SWOT analysis framework. Strengths, weaknesses, opportunities, threats.
Good idea. Starting with strengths, internal positives. Strong brand, right?
Absolutely. So. Top 3 global IT brand, fastest value growth recently. Extensive global presence, scalability via the GDM, deep client relationships, large base, over 1,800 active clients.
Comprehensive service and product portfolio from ADM right up to AI, cloud, Finacle, Panaya. Robust financial position, debt-free, strong cash flow.
Huge talent pool, advanced training like Wingspan, established innovation ecosystem, the Fund Institute, IIN, and historically strong corporate governance.
Okay, weaknesses, internal challenges.
Employee attrition is a persistent industry issue, and they're not immune that 13.7% figure. Growth moderation in some areas, reflected in that 0.3% FY26 guidance.
Margin pressure from costs, wages, tech investments, deal ramp-ups, integration risks always come with acquisitions, maybe perception of agility for such a large organization.
Fair point. And relatively low R&D spending as a strict percentage of revenue compared to some tech giants.
Right. Now, opportunities, external factors they can leverage.
The explosive growth in AI, especially Gen AI, is massive. Continued, even accelerated cloud adoption, ongoing digital transformation across all industries, that's their bread and butter.
Growth of data analytics, IoT, cybersecurity, expansion opportunities in underserved geographies or industries, leveraging strategic partnerships, and the growing demand for ESG-related services.
Lots of potential there. Okay, threats, external risks.
Intense competition, as we discussed. A macroeconomic slowdown or recession hitting client spending, that's a big one. Rapid technological changes and disruption.
Geopolitical instability, protectionism, the evolving regulatory landscape, data privacy, localization, visas, talent shortages, and wage inflation, currency fluctuations, and shifting client demands wanting more value, outcomes, speed, innovation.
Thinking about the innovator's dilemma, could their strength in traditional IT hinder embracing disruptive AI?
It's a valid concern. Existing revenue streams can make it hard to pivot aggressively if it cannibalizes them. But on the flip side, they have the scale, client access, and finances to deploy proven innovations effectively.
And that global delivery model is navigating a tricky geopolitical tightrope now.
Increasingly so. Tensions, protectionism, stricter laws in the US, Europe, India. It forces more localization, local hiring, navigating complex rules. It can erode some cost benefits, demands constant evolution of the model.
And that co-opetition, dynamic partners who are also competitors.
Right. The lines are blurry. Cloud hyperscalers like AWS, Azure, GCP are vital partners, but also offer competing services and AI platforms. Infosys needs to layer unique value industry expertise, integration on top to avoid being squeezed out.
A complex balancing act. Okay, looking ahead now. Future prospects and growth drivers. What are their main strategic initiatives?
It's heavily focused. 1, AI first, powered by Topaz. Gene AI for process improvements, software engineering, customer service, everything.
2, cloud with Cobalt. Comprehensive services for the whole cloud journey, strategic partnerships there.
3, digital at scale. Agile digital across the board, modern apps, analytics, IoT, cyber. 4, energizing the core and automation modernizing legacy systems, efficiency through Project Maximus.
5, large transformative deals prioritizing those multi-year contracts, like the $11 6B TCV in FY25.
6, talent development, always-on learning and AI, cloud, digital. Robust fresher hiring. 7, strategic M&A, that responsible approach for niche capabilities, digital reach.
And 8, expanding geographic reach and localization, building local talent in key markets.
So what could really light a fire under their growth? What are the potential catalysts?
Accelerated Gen AI adoption across the board would be huge. A global economic recovery boosting IT spending, successfully executing those large deals they've won.
New product or platform releases gaining traction. Further strategic acquisitions landing well. getting more momentum with industry-specific solutions.
All potential catalysts, yes. And their long-term vision seems aligned with these big trends.
It does. That purpose of amplifying human potential fits well with digital transformation, AI, cloud, data, even ESG.
Okay, what are the analysts saying as of late May 2025?
The consensus seems to be around moderate buy. Positives highlighted are their strong AI digital position, the large deal wins, operational efficiency drives, strong cash flow, brand value growth.
But the caution comes from
Weaker near-term demand due to macro uncertainty, cautious client spending. That FY26 guidance of 0.3% is a factor. So some downward price target adjustments, concerns if global GDP weakens further. It's a mixed bag of ratings reflecting that uncertainty.
which brings us back to that AI paradox. Huge opportunity, but how do you actually make good money from it consistently right now?
Exactly. Clients are keen exploring AI, but many lack mature enterprise strategies or governance yet. It's early days for broad deployment. The challenge for Infosys and its peers is converting the pilots and hype into substantial, high-margin, recurring revenue. Long-term, the potential is immense, but near-term impact depends on client readiness and Infosys proving the ROI.
And those known unknowns of the macro impact hang over everything.
Definitely. Their prospects are tied to global economic health. Client IT budgets are sensitive to downturns, inflation, geopolitics. The conservative guidance reflects that dependency.
And their M&A strategy remains measured strategic acceleration, not buying growth for growth's sake.
Right. A prudent, risk-controlled approach focused on strategic fit.
Okay, let's talk risks explicitly. How do they manage the potential downsides?
They have a formal enterprise risk management framework following standards like COSO and ISO 31000. It's integrated across the business.
Can you walk us through some key risks and how they try to mitigate them?
Sure. Risk 1. Macroeconomic headwinds reducing spending. Mitigation. Offer cost optimization services, diversify geographically and by industry, build long-term partnerships.
Risk 2. Talent management, acquisition, retention, reskilling.
Mitigation. Invest heavily in training, springboard, competitive benefits, positive environment, strong hiring pipeline, focus on the employee value proposition.
Risk 3. Intense competition and pricing pressure.
Mitigation. Differentiate through AI cloud innovation, IP-led solutions, strategic consulting, service quality, operational efficiencies like Project Maximus.
Risk 4. Cybersecurity, they had that McCamish incident.
Mitigation. Multi-layered security, advanced tech, monitoring, incident response plans, ISO 27001 certification, strategic acquisitions like the missing link.
Risk 5. Regulatory and compliance data privacy, GDPR, DVPDA, localization, visas.
Mitigation. Robust compliance teams and frameworks, adapt hiring locally, like in the U.S., adapt data practices, use integrated GRC platforms.
Risk 6. Execution risk on big strategies or deals.
Mitigation. Strong project management, client-centric delivery, performance monitoring, agile practices.
Risk 7. Technological obsolescence.
Mitigation. Continuous R&D, innovation culture, strategic partnerships, that always-on learning ethos.
Risk 8. Geopolitical risks.
Mitigation. Diversified global delivery centers, robust business continuity planning, ISO 200-2301.
And finally, Risk 9. ESG-related risks.
Mitigation, strong ESG framework, public commitments, carbon neutral, net zero by 2040, ISO certifications offering ESG as a service.
And these risks are all interlinked, aren't they? Mitigation efforts can have knock-on effects or costs.
Absolutely. Increasing local hiring impacts margins. Data localization adds complexity. It's always a trade-off. Proactive mitigation is crucial, but involves strategic investments that can affect near-term financials.
A constant balancing act. Okay, let's wrap this up. Key takeaways, especially for someone looking at Infosys maybe from an investment angle?
Right. So recapping, Infosys is a major global IT leader. They've successfully evolved from the GDM pioneer to an AI-first digital transformation partner. Strong portfolio with Topaz, Cobalt, blue-chip clients mainly in North America and Europe.
Financially, they're resilient. Strong balance sheet, great free cash flow, but navigating slower growth now due to the macro climate. The strategic focus is clearly long-term AI, cloud, digital, plus operational efficiency.
From an analytical view, it's a mature, large-cap IT services play. Historically consistent growth and returns. Right now, the outlook is more moderate growth, so it might appeal to those seeking stability and income from an established player managing a slowdown.
But with that strong innovation and efficiency focus, aiming to capitalize when things pick up again, though execution risks and external factors remain.
You could think of their past growth as GDP plus, Now they're trying to add an innovation kicker with AI, platforms, digital services, aiming for higher, more resilient growth beyond just tracking the economy.
The success of that kicker is really key for their long-term performance.
Exactly. So understanding Infosys means appreciating the history, analyzing the current strategy in this dynamic industry, and acknowledging that big global economic influence. Hopefully, this deep dive gives you that foundational understanding.
And on that note, maybe a final thought for you to ponder. With AI advancing so fast, how might a company like Infosys, with its global reach and deep client connections, actually shape the future of how businesses fundamentally operate using technology?
This is definitely something to think about. Okay, standard disclaimer time.
Right. The information provided in this discussion is for informational and educational purposes only. It should not be taken as financial or investment advice. Investing involves risks, and you'd lose money. Please do your own thorough research and consult with a qualified financial advisor before making any investment decisions. We are not liable for any actions taken based on this information.
Thank you so much for joining us for this deep dive into Infosys Ltd. We really hope this analysis is giving you some valuable insights into this major player in the digital world. And we encourage you to stay tuned to our platform for more expert financial education and deep dives into key companies and trends.